All right, well, it's time now for Check of the Day's business news, and for that I'm joined by Stephen Carroll. Hello, Stephen.
Hi, Molly.
You're going to walk us through, of course, starting through with word of this tax evasion and involving HSBC Bank. Tell us about it.
Yeah, that's right. This is a massive investigation by media outlets, including France's Le Monde and Britain's Guardian newspaper. They've revealed that HSBC's Swiss private banking arm has helped thousands of wealthy clients to evade tax, and the files were leaked by a former IT expert at the bank, Hervé Falciani, in late 2007. They show that HSBC allowed clients to withdraw blocks of foreign currency, helped them hide their accounts from foreign authorities, and encouraged them to sign up for new accounts to avoid paying European taxes. Plenty more in the newspapers in a moment with Oliver, but first, this report from Josh Vardy.
The biggest banking leak in history. Files published by the International Consortium of Investigative Journalists show how HSBC has helped its wealthy customers avoid paying taxes and hide millions of dollars. The case shows how the British bank offered accounts in its secretive Swiss arm to celebrities and politicians, alongside international criminals and corrupt businessmen. On top of that, notes in the files indicate that HSBC employees were well aware of their clients' intentions. When the leak was made public on Sunday in a number of media outlets like British newspaper The Guardian, HSBC released a lengthy statement which said the Swiss private banking industry had operated differently in the past. They claimed that HSBC had implemented numerous initiatives designed to prevent its banking services being used to evade taxes or launder money. The bank also said the number of accounts held in their Swiss private arm had dropped by 2/3, from around 30,000 in 2007 to over 10,000 at the end of last year. The data behind the leak came from Hervé Falciani, a former IT worker at the HSBC Swiss private banking arm, who fled Switzerland to France after downloading company files in 2007. Falciani was subsequently charged with industrial espionage by Switzerland, but French authorities have so far refused to hand him over, instead sharing the information with tax authorities across the world.
All right, well, Stephen, let's take a look now at how we're seeing markets react. Of course, we had the Greek Prime Minister who announced his policy statement over the weekend. How are we seeing markets then?
Well, first of all, let's talk about the bond markets. Greece's borrowing costs have gone up this morning as a result of that speech by Alexis Tsipras. Reiterated his demand that he won't be seeking an extension of their bailout and that he wants some sort of bridging loan before they come up with a final deal with their international borrowers. This is the benchmark borrowing cost for Greece. It's 10-year bond yield at over 10%, as you can see. Now, this is obviously completely theoretical because Greece can't borrow at rates like this. Anything above 7% means they need those bailout funds to be able to borrow. But that's where the markets are seeing things at the moment. On the stock markets, you've seen the European indexes opening down at the start of trading. HSBC down just under 1% after those news of those leaks being published yesterday. French bank BNP Paribas down by more than 2% after being downgraded by JP Morgan. And of course, we'll be watching what happens on the Athens markets when they open in around 15 minutes' time. Now, over in Asia, poor trade figures from China published on Sunday gave the markets a bit of a wobble this Monday morning. Hong Kong, as you can see, the Hang Seng down by 0.5%. Shanghai Composite still seeing some gains, though, up by just 0.6% in trading there.
All right, Stephen, now you're going to take us to Russia next, where it's been a year now since the Sochi Olympic Games were held.
That's right, and Vladimir Putin had hoped the legacy of those games would be a luxury village drawing tourists from near and far. But the $51 billion project has gone sour, dogged by rising costs and investors who are now pulling out of the project. Thomas Waterhouse has the details.
It was all fireworks and frivolity a year ago, as the most expensive Winter Olympics in history kicked off in style in Sochi. But 1 year on, Vladimir Putin's dream of turning the site into a winter wonderland world-class resort has turned into a nightmare. Russia vowed to pay for the games by getting super-rich oligarch investors to take the burden from the state. But now, as they themselves struggle to survive in a recession and with an economy crippled by Western sanctions, the oligarchs are increasingly dumping Sochi's toxic assets back on the state, meaning the Russian taxpayer now has to pick up the bill.
We think that the government should continue to carry out its role as the main partner and give the private investor, who fulfilled all the main obligations, a return of the money he invested.
Viktor Vekselberg, thought to be Russia's third richest man, invested $500 million to build 2 giant hotels here. But with the hotel market saturated, he's decided to hand over one of them, dumping the $450 million loan he took out onto the state.
Businessmen behave like businessmen. They have a task to reduce expenses and find new sources of financing, refinancing, etc. They think I'd rather lose what I have invested, and then I won't have to pay out the rest in loans. So take away this pledge, and I'm not a participant of the process anymore.
Such asset dumping is a major headache for Putin, who now needs to pay off the oligarchs while preventing any detail of these deals triggering popular unrest.
All right, well, finally, it's been over a week from the Super Bowl when we saw it take place, and we are seeing, though, that some people trying to cash in on the internet sensation from the games a bit. They're in some legal trouble. Walk us through that.
That's right. Well, of course, because we're not talking about the result of the Super Bowl, but in fact, Left Shark, which if you watch the halftime show at Katy Perry, you'll know, was one of her shark dancers who didn't seem to quite get the dance moves, but quickly became a viral sensation afterwards. As you might expect, Left Shark merchandise flooded the internet in the days following the Super Bowl, but Katy Perry's lawyers have hit back, and they've sent a whole range of cease and desist letters to those who were trying to sell shark merchandise. One of those published the letter online. He was selling a 3D recreation of the Left Shark costume, and he was forced to stop production after just 24 hours of having the design online because of the lawyer's letter coming from Katy Perry. He'd sold 14 of them in 24 hours.
14?
So there is quite a demand out there for Left Shark merchandise,
Left Shark
but not
14.
for now. Won't be coming from any unofficial sources.
No, not definitely indeed. All right, well, Stephen, thank you for the day's business update.